Sometimes I come to work to the office, and one of these mornings I'm experiencing the 25x trade. So I wanted to share this with you in real time, guys. I just closed the trade. I pre-recorded the session. I'm going to play this after the end of this video. Sometimes trading doesn't go in exactly the same way we want it. Sometimes trading goes in completely the opposite way first, and then it goes in the right direction. So this is something I wanted to talk about today. What exactly means to be a profitable trader. I just wanted to make this video today. I would use a slightly different format, guys. So I closed this trade from the office that I sometimes come to work at. Here is the 1 to 25 risk to reward ratio trade, and I've just shared this with the community. I couldn't be really happier, so I can walk it through in real time. So what happened here was, if we can see that the trade was closed this morning, this is where it was closed, 1 to 25, and just before closing the trade, this is the trade before I closed the trade. And yesterday, just after the US Open, is where I went short. So you can see here precisely, this is where we went short, the entry and the stop loss at 49,620. Straight after, there was a huge bearish candle, and from there the price just kept on going lower and lower and lower. Initially, literally 1 hour later, it was already giving us 12 axis, or 1 to 12 risk to reward ratio. That's something I usually do, guys. I come slightly earlier to the office if I have a trade open. I'm trying to monitor the market and see pre-market open if I'm going to hold this trade or close it. And I did this exact same thing this morning. It's important to have a routine, so once you break this routine, things go all over the place. Early bird catches the worm, guys. Yesterday I opened these trades. Currently it's giving me 1 to 25 risk to reward ratio, and I'm thinking of closing it since where we opened the trade. If I go back to the 1 minute charts, you can actually see where exactly I opened this trade. This was just after the US Open. So that's where we opened the trades. 49,591 and 49,620 is my stop loss. So now I'm gonna fast forward today. This was yesterday. Going back to the 15-minute chart, you can see this was yesterday, just after 2:30 UK time, which is 9:30 Eastern. And this was the 7th of January. Today is the 8th of January, and this is just before the London Open. So I'm going to close this trade now and inform the community. Order closed, guys. And this was 1 to 25. Risk to reward ratio. Just gonna take a screenshot for the community. Alrighty, guys, I think a lot of you will be interested more in the process than in the outcome of this trade, and I must say that it is not very natural. We don't use any indicators, moving average, so there are no indicators, and so there are no moving averages, or we don't even use candlesticks much. So if a lot of you are thinking that we are using the pin bar or the bullish, bearish engulfing, we don't really use those. What we use instead is something that is a little known and there is not much online. It's called pricing discrepancies. It's our proprietary trading system we are using. We combine this with supply and demand zones, but not the conventional supply and demand zones that are taken from the higher time frames. We strictly use the 15-minute time frame for my day trading, the double digits day trading strategy. And if this is our supply zone, this is taken from the 15-minute time frame, and we use it in a specific way. So we are only looking for the closest clusters, not all of them, in order to come up with our zones. If this is our supply, this is our demand zone. Just underneath, anything in between has different degree of importance. So if trade appears or setup appears between those two zones, it has different degrees of bullishness or bearishness. For instance, some of our strongest bullish trades are taken just under a supply zone. Some of our strongest bearish trades are taken just under a just above a demand zone. Our strongest bearish trades are taken just outside of the supply zone. Some of our strongest bullish trends are taken just below a demand zone. Then we also divide the demand and the supply zones into areas that we play with. So this is one, and then the second one, and then we have again 1 degree of importance and a second degree of importance, and then anything in between as well plays a role here, as I've just explained. The trade we've taken was appearing just outside of a supply zone, and this usually is one of the best places to take a short trade. So the price was just coming outside of the supply zone, and we saw a pricing discrepancy around this level just outside of the supply zone, and we took a short trade. In this case, we had a very tight stop loss, and by very tight stop loss, I mean, for Dow at the Open, the US Open, it was around 25 points, which is very, very tight considering the market is quite volatile. So this, if this was our entry and this was our stop loss, then let's mark those lines. So this was our stop loss, and then we had our entry here. So these were very, very close to each other. What happens? There are usually a couple of things that can happen after we take a short trade. So in the majority of the cases, a trade will go, or it might go in our favor if we don't get stopped out, of course. Then it might retest the entry one or potentially a couple of times and only then shoot lower. So this might take a little bit of time. We are usually into a risk-free trade very quickly. So this will be between 30 and 90 seconds. So the price might go in our favor very quickly. But then it might kind of slow down, then come back, retest this level, or even stop us out. And then we might end up with a break-even trade. But if we don't get stopped out, and if the price retests the entry a couple of times, maybe 2 or 3 times, this might give me a very strong confirmation that we are onto a very good trade. If we don't get stopped out, we might as well end up with a 10x or higher returning trade. So this is scenario 1. Scenario 2 might also be a possibility if the price fills our entry, so we are going in the right direction, but then instead of retesting the entry multiple times, the price just shuts down very quickly. And this is exactly what happened with this trade. I was in a risk-free trade in literally 15 to 20 seconds, and maybe 10 or 15 minutes later, I was already running a double-digit returning trade, which was 10 or 12 x's. In normal circumstances, it doesn't happen that often, but when it happens, it's usually a precursor of a very strong trade, a trade that will give us maybe 2 or 3 times of those 10, 12 initial x's. And this is exactly what happened with this trade. So I closed the trade on the following day during the London Open. So again, this was not even a full 24-hour trade. This was more of a 15, 18-hour trade. But again, we had a very, very strong trend, and the price reached from one major supply zone to another major demand zone in a matter of less than 24 hours, which doesn't happen that often. And one more thing, guys, I just wanted to give you a bit of a juice behind the theory here. So as you can see, this was our screenshot from the 15-minute time frame, and this is where we was looking for a potential shorting opportunity. This is where we took it. I managed to hold all the way up to here, which was a previous demand zone, and I took profits at this point. During the US Open again, we had a great opportunity to go long, but I didn't really take it. I just wanted to try my discipline. I didn't try this afternoon session, so I didn't take it. I had a few of my students that managed to take this trade, and this is proving a very, very profitable trade. And now the price is literally going to test the next supply zone. So the major thing here is, of course, a lot of people are looking at supply and demand zones in different ways. We look at it in our own way by using the 15-minute time frame instead of the higher time frames. This has proven to work extremely well for me. By doing it this way, we are able to minimize the cost of entry, and combining this with the pricing discrepancies for the 1-minute chart, it also helps us to further minimize those stop losses. This is what allows us to actually enter in high risk reward ratio trades. This is one of the major factors, not the only thing, of course. So for instance, a lot of traders, if we take this short entry here on the 15-minute time frame, for a lot of traders, if they see this rejection, they would wait for the 15 minutes candle to close, but then they will be quite late. And if they enter in a short trade here, most likely they would place their stop losses here, which in the best case scenario, it might allow them for 1, 2, 3x's return. In our case, this was a 25x return trade, guys. This is a solid trading edge. It's not something that will not be sustainable over the long term, because if you rely on 1 to 2 or 1 to 3 risk to reward ratios, this is great if you can have a very high win rate, and a lot of systems, they do have a high win rate. The problem there is that the human factor interferes, and when the win rate starts dropping, then this becomes unsustainable over the long term. That's why you need something else that will be able to come in and cushion you or protect you from those swings of the win rate, the inability to handle the losing streaks. So in this case, I'm not saying this is the only way you can do it, but for me, running an extremely high risk reward ratios has been able to help me to sustain those losing streaks, because almost nobody talks about the losing streaks, and they are part of doing this business. You can't have a trading system without vouching for those losing streaks, because they're part of doing the business. And again, almost nobody talks about them. I'm not sure why. I can only suspect what's the reason behind people not talking about that. But for me, if you don't have something that gives you a lot stronger trading edge than what anyone else is using out there, be it in the form of a high risk reward ratio or something else, then it will be very hard for you to sustain those losing streaks psychologically.